Hi everyone and welcome to today's morning report on Thursday the 27th of August with me, Rich Payne, market analyst at Tech Markets. There's been a big market rally again today. FTSE's up 2%, DAX up almost 3%, and that's basically been driven by a huge rally on Wall Street overnight, which was in turn induced by dovish comments from FOMC Bill Dudley, who basically suggested that the recent activity in financial markets around the world had made the case for tightening in September less compelling. He did sort of go on to sort of caveat that by saying, well, there's a lot of data still to come out, and it could again change the picture, but still, markets have taken that very positively. Big dovish comments pushing back the potential for a September rate hike. Markets are now sort of factoring in December, really, I think, as the more likely month that the Fed's going to make a move, and that certainly has impacted across the board. Now, what we have seen is that improved sentiment has strengthened the dollar fundamentally. Big jump in the dollar yesterday, and that move has sort of continued today, really. Not enormous amount of movement around the dollar yet on the euro or sterling, but I think these markets are sort of just settling down still in the forex space. Interesting that we have seen commodity prices moving sharply. There's been a big rally on oil. It's just a WTI. I've talked about this downtrend that's been lasting for about 8 weeks now, and it's been such a good exponent of a downtrend. But now we're beginning to see that downtrend being seriously tested. Above $40, basically last 3 days the oil price has sort of stabilised a bit and now starting to push a bit higher. And $40 is obviously a bit of a key level, because that was obviously a key level to the downside, and that's been broken up, and that the fact that that downtrend's being really tested now, and it's also, if you read my morning report, between $40 and $40.50, there is a resistance band. So it's very interesting that these levels are now being tested. Interesting moves again also on treasuries. Treasury was again sharply higher as the expectation or market sentiment really improved yesterday, and that has helped to drive treasury yields higher. So we also saw another sharp decline in the VIX index, down 16% on that VIX index, as volatility starts to sort of just come lower after a couple of really big days of volatility. We're still up at elevated levels at over 30 on the VIX, but I think that seems to be still looking as though it's going to be coming down. So some big moves in these markets, certainly on equities, and we're seeing some improvement in sentiment across the board. Now, what we do have today is the start of Jackson Hole, the Jackson Hole Economic Symposium, which Janet Yellen is not speaking at, or for that matter, Bill Dudley. But still, we're going to get some Fed comments from other FOMC members, and exactly how those comments come out will be very interesting to see how they have reacted to the recent market moves, and we'll be focusing on that today. But we've also got some data. We've got the first of all, we have, if that annoyingly doesn't, yeah, we got GDP for the states. First reading of flash GDP came at 2.3%. Now that's expected to be revised higher to 3.2% in the prelim data. So that would be a positive for the dollar if that was to come out. Also, we've got jobless claims at the same time, expected to be around about 275, so basically in line with what we saw last week. And then at 3 o'clock we've got the pending home sales. Now, pending home sales took a bit of a dive last month, but they're expected to come back to 1% growth on the month, so that would be sort of unwinding some of that weakness that we saw last month. So it's still some pretty decent housing data that's coming out of the States is expected, but I think markets are going to be more interested in these Fed FOMC comments out of Jackson Hole today. So the data that we get is not it is helping. I mean, the better than expected durable goods that we saw yesterday from the States did help sentiment, but still, I think it's more the fact that we're moving on the general market sentiment and around the prospects of Fed rate hike as well. So this improvement in commodity prices is also helping sentiment today. Now, my chart of the day is the Kiwi dollar. Now, the Kiwi dollar has had this sharp spike lower on Monday, and it's not really been able to recover from that. And look at this breakdown. That old range that I've been talking about for the last several weeks actually got broken on Monday, closed below, and then the subsequent couple of candles are also below, but you're also seeing lower highs as well. Just quickly move on to that intraday chart. You can see in the last 2 or 3 days we had this resistance that came in around that old pivot level of 60. Unfortunately, this chart is sort of affected by this spike, but I tell you what, I can sort that out by wrong way doing that. Let's do that. Makes it a bit easier to see. Right, so 65.50 is was an old pivot level on this chart. Has been for a while. 65.50, as you can see there, continues to come in as a key level. And again on Tuesday, that sort of started to come in and act as resistance. And yesterday we saw 65 figure coming in as well. Around about, which is 65 figure again is sort of the range low, pretty much on that trading range. So it's very interesting that we're sort of seeing that these moves come now, and we've had a bit of a rebound today. I don't necessarily think it's going to do a great deal. I think that these momentum indicators, generally speaking, are on the daily chart, are still pretty negatively configured. RSI has turned lower. MACD lines crossing lower is negative as well, and stochastics as well. So generally speaking, you'd probably be arguing that the rallies that we're now seeing as a chance to sell. And let me just zoom in here. We've seen this little mini rally again today, back towards a minor sort of, in the last few days, a minor sort of pivot level. Seems to be an old support that's acting potentially now as new resistance around that 64, sort of 75, 80 level. And I would be using rallies as a chance to sell. This RSI on the hourly chart again back towards the mid 50s, falling away. MACD lines negatively configured. Stochastics as well, if they start to roll over at this sort of level, is again sort of reconfirming that rally that we're seeing is probably going to be a chance to sell on this Kiwi chart now. So very interesting that we're seeing these moves. Now on the Kiwi, the low yesterday is the initial support 64.07, and there's a minor level above that 64.29, but certainly it looks like lower highs and lower lows, and it looks like it's sort of drifting back towards a test of potentially even that spike low at 62.44. But still, I think I'd use this rally as a chance to sell on the Kiwi today. Now, to change this outlook, you'd certainly want a move above 65.50, I would say. So I would wish you good luck in your trading today, and I will speak to you later. Thank you.